Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 8th of October, 2018, just after 4:10 p.m. Central Daylight Time. An interesting day. You know, this is going to be another week where we get the USDA reports on the stock sizes, what they're looking for in the crops. Production numbers obviously going to be very important. Right now, still the wheat and the corn under some pressure. Beans got a little bit of a lift. You know, we're at that time of the year where you'll hear talk about too much rain, not enough rain, and blah, blah, so on for different crops. In other words, in the wheat, you get some rain, it helps the crops at this time of year. You get too much rain, that wheat crop that gets helped. For the beans, it can hurt it a little bit because you start wondering, what about harvest? Is it going to delay anything? And in corn, it seems to be a mixed picture. We do have a lot of cool weather moving in as well, so farmers are going to be really ramping things up. And you see that cool weather if you take a look at the natural gas up 12 cents today. So let's take a look. As I pointed out last week, I thought the market, if you looked at the weekly chart, had gone up to, and it's still fighting at, the 18-week moving average of closes. Now, you finished at 869 3/4. That number's 857, so it's 12 cents over it. The bigger question I think traders are asking themselves is, did we see the lows of this market between the 811.5 to 810.5 area? That is the question I think a number of traders are asking. And as you can see it right here, that's going to be what they look at. In terms of the swing line, the market's got a pattern of higher lows, higher highs on the daily chart. That's bullish. Until you take out 851.5, the pattern stays with the higher high, higher low. If the market were to keep running, a moving average above it could be the 100-day average at 897, but more likely what's happening is the market keeps hitting the upper Bollinger Band, backs away a little, and then widens it out. This was a very narrow pattern, as you can see right here. And as you can see what the market's done from that very narrow pattern, it is pushing on it and widening that pattern out. And it's staying within the Bollinger Bands. That's a friendly pattern. You'd have to really, if you broke down, 816 1/4 because of that is still above those break lows of 811.5 and 810. In terms of momentum, it's bullish. The market converted itself from being overbought to what we call locked in with a bullish embedded reading. If you believe, as I do, that price leads momentum most of the time, when the red line closes back under 80, that's when I think the market will be ready to correct to the 18-day average. Barring that, I would expect to see this market well bought on the breaks. In the meal market, like that sideways action I showed in soybeans, you're right here against it. Notice that upper top? You tried to extend today, you didn't. And unlike beans, you're just overbought. So I think that the market's in a resistance zone in the meal right now. And in the soybean oil market, this still has the embedded reading. So that dictates the chart. Until the red line closes under 80, this market is fighting a battle right now between the 100-day moving average of closes in green and the upper Bollinger Band. Lose that number, the embedded reading, and then I'd argue that maybe you can get to that 18-day average of closes. Corn is going sideways, and you see this in how the price and the Bollinger Bands have just flattened out on you. You can also see resistance is rather formidable in the 374 3/4 to 375 3/4 area, the combination of the 100-day average, upper Bollinger Band. Remember, what Bollinger Bands are is an algorithm designed to keep the market trading within them. Yes, the markets can poke through them, and they do. Yes, the market can come out of sideways action and ultimately trend. That's what you want it to do. This is fairly wide in the sequence. It's not quite the way that I see the meal market sideways or the soybeans. So yes, it is in that, and yes, there's resistance. It's not quite the same pattern, though. This market, by the way, how many days do we have over an 80 reading? Over it today, over it yesterday, Friday, over it the day before. So you have what's called an embedded reading, which means until the red line closes back under 80, I say this market will be well supported by the bulls. In the wheat market, you had an outside day down. What you did is you took out Friday's high and low, closed lower, closed under the opener and under the 18-day average of closes. With that, you turned momentum down. So this market, in my definition, now has a pattern of lower highs, lower lows, bearish. Bias down because you're under the 18-day average, momentum down. I would look to see sellers show up at that 18-day average, and I would say today's high is going to be important because if you take out the high of an outside day down, I call that a bear trap. And when that occurs, a market often goes to the closest of one of the key moving averages of the Bollinger Band. Doesn't have to, it's often. That would be this resistance at 529 3/4. Barring that, if the market wants to accelerate, maybe it can get to the lower Bollinger Band. In the wheat market, you continue on to the upside, and today you thrust up again to the upper Bollinger Band. I would think that the pros are taking money off the table here, and you're overbought. That doesn't mean it can't go higher, but the odds of staying over that number are not real strong. Yes, you did it here, but you came out of a more sideways action. This is a market that's really stretched itself to the upside, as is coffee. The soft commodities today came alive, all of them, as you'll see. This market's now into an area where I would think pros are taking some money off the table if they're long. In the cocoa, even an up day, but it can get back its embedded reading tomorrow if prices revert back to the downside. Even lowly cotton. Higher lows now. It's trying to make higher lows and higher highs. Let me see if I might have missed this right here. That number 75.63 is the low. Back here, it's 75.37. So what we have is I've done this wrong. I should have a blue arrow pointing up here, another one here, the objectives, the 18-day average of closes, which also comes into play because you lost that embedded reading. And so often I'll say that brings price and the 18-day average together. Doesn't have to, but that's often the case. When you lost the embedded reading right here in the cattle, it instantly did it. But that's still the concept. Cattle market is fighting at the 18-day average for another direction. Same in the feeder cattle. Refuses to close under it even though you've got the market with the swing line down. And in the hog market, you're still very much in an uptrend with higher lows, higher highs, the market acting pretty good. I know this is an agriculture update that I do, but I finished my silver report today. So it is going out to my subscribers tonight. Everybody else will start receiving them in sequence tomorrow. If you're not on my mailing list, you're not going to get it. It's going to include, I've written it already, so I know. So I've got price counts, seasonal charts, weekly charts, daily charts, giving you a real cool play that could come into play at the end of the year. I'm not saying it will because I don't know. I don't walk on water. I'm just giving you what I see. You want to know what that is? You want to see the report. How do you get it? Well, if you're not on our list, go to our website, www.iraepstein.com. You can call us at 866-973-2077. You can click up here if you're watching me on YouTube. That'll take you right to our offers page. Be sure to click the silver report. I'm Ira Epstein. You have a good day, and I'll catch you all tomorrow.